دوستان سلام، من امیر محمدی پور هستم، مدرس و معامله‌گر از آکادمی تریدتاک. با اپیزود نهم منتورشیپ ICT 2023 در خدمتتون هستم. تو این اپیزود ICT یه لایف ترید رو به صورت پیپر ترید روی نمودار ایمنی S&P انجام میده. ویدیوی خیلی خوبیه، میتونید ازش الهام بگیرید برای معاملاتتون. به نحوه استفاده از زمان و مدل مدیریت معامله دقت کنید. هر کاری که انجام میده رو یادداشت کنید و بعدم سعی کنید درک کنید چرا این کارا رو انجام داده. این یکی از راههاییه که شما میتونید از این طریق دریافت بیشتری از ویدیوهای ICT داشته باشید. مثل همیشه ما در تریدتاک پاسخگوی سوالاتتون هستیم. ضمن اینکه کانال یوتیوب تریدتاک هم اگر دنبال کنید میتونید مثالای خوبی در قالب لایو ترید به صورت پیپر ترید در فارکس ببینید. من آدرسشم اینجا دوباره قرار میدم. دیگه بیشتر از این وقتتون رو نمیگیرم. خودتون ویدیو رو با دقت ببینید.
All right, folks, going long here. This is a review. This is actual time. I usually take these executions and speed them up and put them around 2 minutes long for Twitter. Usually throw some kind of music over top of it just for entertainment value. You may or may not like my choice of music, but it's not for you, it's for me. So I'm going to kind of like walk you through this. Before I get into it, I outlined 40-30 as my level in the weekend commentary before we even started trading this week. And also I mentioned it as my focus point for this morning on Twitter. If you're not following me on Twitter, you can find the actual account on my YouTube channel. Go to the main page, far right corner, you'll see the official ICT Twitter account. That's how you get things alerted to you real time. Any level I'm watching that's pertinent, any draw on liquidity, something like that, change of schedule for live sessions and such. And I went long inside the fair value gap as it was approaching the middle part of that shaded area. And I'm placing my limit order up here as a best case scenario in case it was to wildly snap up there. I always like to use a best case scenario exit. And the 40-30 level, the reason why I like that, if you go to your daily chart for ES H2023, that is the closing price on December 14th, 2022. Okay, so open, high, low, and close is all you need. Add time elements and understanding about that, and specific macros that the algorithm does that delivers price. And yes, it does, and you'll see proof of that again here. And I sent 3 tweets out stating that the 943 candle, which is the shaded candle, big bullish green candle, that's the one I'm drawing everyone's attention to on Twitter. And then the down close that I entered on, that's an order block. So you can see already we have a potential volume imbalance forming where there's an absence of any bodies overlapping one another between 2 candles. So in my mind, I'm watching that form and I want to see it stay open. That gap between the present candles open and the previous candles close. Because if I can get a return back down into that, I'll go long additional contracts and pyramid my position up. I'm going to be aiming for about $10,000. All in one trade, build it up from one entry using the logic. Now, if you look at the 920 low, their sell side stops below that. So sell side liquidity was purged with a drop down at essentially 940. And the 40-30 level was the objective I gave you over the weekend before the market started trading, and I prompted everyone live on Twitter. I stated that's my next level of interest. I'm sidelined early on. I said, there's nothing really exciting to do. You just have to wait. So we waited for the 930 opening, which is exactly what I prompted everyone to do on Twitter. And we seen sell side taken out, and then the market rallied up. Now, you're probably questioning why am I using that fair value gap? Well, I'm using an advanced model, and because I'm expecting expansion, I'm not looking for a trending day. I'm just looking for an expansion up into the 40-30 level, which would close in the range from December 14th's closing price on the daily chart for ESH2023 on TradingView. Drawing that level out on your chart, you'll get essentially 40-30. So I'm outlining the reason why my stop loss is below the mean threshold of the down close candle, the most closest to the 940 low. Okay, so the middle of that candle, that's where I have my stop below that. It should not go back down there. Why shouldn't it go down there? Because we've taken stops at the 920 low. And your time should always be set to New York local time. Otherwise, you're not going to be able to track me on the recordings. So you can definitely see the volume imbalance. And I'm just getting some measurements here. Nothing's really lining up with specific levels I like. So my attention primarily is focused on the 40-30. So I'll be taking the bulk of whatever I accumulate in longs off at 40-30 or higher. Right now I have 8 contracts long. And the stop loss is based on a $100,000 account. So if you were funded with a $100,000 trading account, the risk on this trade is 1.2%. But I'll be aiming for about 8.5 to 10%. 10%. That's the goal I'm reaching for, percentage-wise. So now I'm giving you a reminder that while you're watching price, you want to be looking at it through the lens of 5 handles each. Every increment move in 5 handles, because you want to train your eye, and it's returning back to that volume imbalance now. I'll come back to that in a second as soon as I'm done figuring out how I want to put the text inside this rectangle. Obsessively compulsive. Now 5 handles is the equivalent of a move from 4,025 to 4,020. That's 20 ticks. Okay. In terms of money, if you were trading one mini contract of ES, that would be equivalent to $250, or one handle being $50, profit or loss. So you can see we returned back down into that volume imbalance there. Don't worry, I'll get the next pass down. Now I'm thinking I want to see it have speed and distance through the high that's already formed. It's already banging around in here, and I'm going to look to bring that stop up a little bit, but it has to show me reaction at the volume imbalance, which I'm annotating right now. And again, a volume imbalance is my concept of identifying an area where there may or may not be an overlap between 2 candles with their wicks, or a wick, like we see here. Like the candle right to the right of my entry, that up close candle, that's the candle I'm looking at, and that turns that wick. And the very next candle, it opens higher than the previous candle's close. So I'm at those trend lines, a little segment right there. I'm focusing on that. Now, if we drop down the midpoint, there you go. I'm looking for that as an entry. I'm trying to time the move of the wick prior to the candle that's trading right now. I want to buy it as it's heading towards the volume imbalance. It may or may not touch the volume imbalance again, but I'm trying to trade as the candle's going down. Notice that. I'm entering long on down close candles or down candles, and I'm taking profits on longs in up candles. That is the market efficiency paradigm that I teach. All right, so now the risk has been elevated to 1.3%, which is minuscule. And I'm going to be looking to raise the stop up. But if it gives me another opportunity to go long, one more pyramiding entry, I'll take that. but I'm focusing on the high formed around the 930 right there. I want to see speed and distance, how fast it can get through that high, because I'll be judging that based on its willingness to get through that 40.23.5 level, which is the morning session high. Now the candle I entered initially on inside the fair value gap, that shaded blue, that fair value gap's high, I have that level in my mind as a potential area where it can revisit that. I don't believe it's likely to do that now because we've traded through the bodies of the swing high that's in price right now. So 1, 2, 3, 4 candles back from where it is right now. Because it's done that, I feel confident that I can have my stop loss below the low of that retracement, the big down close candle. I don't have the timing to tell you, but where I did my second partial entry to the left of that down close candle, I want to have my stop loss below that low because it will not return back into the fair value gap now. So the volume imbalance should keep price at bay because there's an order block when I entered in on initially during the fair value gap. So now I've removed risk, and because it's spending too much time below that low at 930. So we have a dealing range that it's operating in between the 943 candle and present and 930 high. So it can bang around in here, and I want to see it move aggressively through this high. I want to see speed, not just poke its head above it. Otherwise, it can potentially come back down in and retest that volume imbalance, which is essentially fine. It just runs the risk of, if there's some kind of static price action, it could stop me out. But right now, I feel confident where my stop is. That down close candle is a bullish order block just to the left of my second partial entry. That entire range, we can use that to go long another partial to build up the position, or it could be a independent entry all together by itself. And my mind is, we've pierced that 930 high. We haven't done it with a great deal of energy. So I'm thinking right now, it could potentially trade back down into the order block. So I'm looking at taking off 6 or half of the position I have on if it can run to 40.30. Any retracements here going lower, I'm not looking at the fair value gap that you might be seeing 2 candles back to the left. I'm looking at the down close candle, keep going back to the left a little bit further where it traded into the volume imbalance. I'm looking at that down close candle where it might want to come back down into that and accumulate more long positions. Because remember, the stops have already been cleared at 920, slow at 940. So I'm trusting the idea that that unrealized objective or premium array at 40.30, which we talked about before the market opened and started trading this week, is still a viable target. Now that's not a buy there because even though we dropped down into what would look like a volume, fair value gap, I'm taking your attention to this down close candle right. I'm dropping it wrong here. There it is. That right there is my bullish order block. Okay, so I'm focusing inside that candle, and I will look to participate on the upside move from that candle as well. Okay, so I went long as we entered into about the midpoint or mean threshold of that down close candle. And I'm trusting, all my faith is now on the volume imbalance, because price should not go back below the volume imbalance. It can touch the top, it can touch the bottom of it, but it should not pierce it. Now, contrast this rationale and thinking with Forex, because you would get smoked if you had your stop loss like this, because it's rigged. Your broker is going to cannibalize you. I don't care what anybody says. Okay, they will cannibalize you. You can't trade this precise with Forex. It can't happen. Won't happen. Not with real money. Not with size, because they will snatch you. Futures is a much cleaner and more professionally managed asset class. Beautiful retest of that. Look at that. And my stop loss is just still at that low on the low candle prior to that run above the 930 high. So right now it's showing that my stop is negative for $225. I'm going to correct that. And I want to see it leave the order block level I have it outlined here with the plus OB is annotating it's a bullish order block. So we're inside that entire candle, and I'm expecting it to accumulate more smart money longs. And then after a measure of time, the algorithm will reprice higher, and you'll see. I'll tell you when I'm looking for it. But right now, buying is not making this go up. That's not what's going on. The algorithm is holding price inside of that down close candle that I've identified as a bullish order block. And now I'm stating that it needs to make a new high and go above the 930 high and the higher high that it formed just a few candles back. But it needs to do it quickly and strong. There's a small little SIBI, which I'll annotate, and that level needs to be breached. And this is a trigger that'll tell me when the algorithm will start firing aggressively and spooling price. It's not because of buyers coming in. I'll tell you exactly the level it's going to have to break before you start seeing it accelerate to the upside. This is a signature that's unique to me. Once it takes that candle's high out, it should accelerate and not trade below the lowest open or close of the swing low that's already in place right now. Notice where my stop loss is. It's at the low of the volume imbalance. There's the one order block right there, but I'm not going to draw it out. Right there, it's touching the order block. And once it takes that level where it says needs to rip through, once it does that, the algorithm will start spooling aggressively and repricing higher. It matters not how many buyers are coming in, no matter how many sellers are coming in, it's going to rip through that level and then reprice to where the buy side is, which is above the high formed at 953 or so, 954. And here we go. Acceleration, like gas on a fire. And then your focus needs to be at that 40-30 level. Now, because I have 14 contracts on, I'm going to take 9 off. I'm going to have the larger position off. I don't see a continuation on the upside. That's why I want to take the bulk of it off here. And I'm watching how we stay above the high that was formed at 930 and 953 or so. Now, how many times did it move 5 handles in all of this price movement in the direction that we were looking for 40-30? Several. 1, 2, 3 times. Each one would potentially accumulate to 15 handles for the day, which is what I'm essentially going to be getting here shortly anyway. Trade down to a mitigation block. It should accumulate new longs and accelerate through. And I have set to take 9 off as soon as it prints above 40-30. There's a macro in price that takes place between 950 and 1010, and that usually causes a price run, and liquidity and or inefficiency will be retraded to. And now, because I'm inside the narrative correctly, I've outlined it this morning, told you what I was looking for. You're watching me execute here, the logic as to why it's going on. And once it starts to rip here, and sliding on into home, rookie sensation ICT delivers it once again. 9 contracts off. Now, because it stalled like that, I ended up hitting it again, and it puts me short now 4 contracts. So I hurry up and close that because I was wondering why it was lagging. So $10,400 in one trade, one run, risking no more than 1.3% of the account. Highly precise, very specific ideas, aggressive and next level superior stop loss management. And I think one could agree that this was pretty insightful. Until next time, be safe.